As mentioned in the earlier video, Safe Investing: The Path to Wealth, here are the example 5 sectors that you have invested in: healthcare, utilities, energy, materials, financials. After 3 months, you get a $200 dividend. The market value of the stocks has changed. There are 2 strategies. Use the dividend to buy the stock with the most percentage loss, and/or sell the stock with the highest percentage gain and buy the stock with the most loss. For tax reasons, if you can wait, sell only stocks that you have held for over a year. This gets a smaller tax. After getting your quarterly dividend of $200, you review the stocks in your portfolio. What you are looking for are the extreme gainers and losers. Here the percentage gainers are in green and the losers are in red. You can see that the biggest gainer is PFE, Pfizer, at 20% or $400. The biggest loser is BHP, Australian Mining, at 18%. Take the $200 and buy BHP. With the second strategy of selling the stock's gain and buying the lowest one, you would sell $400 of PFE and buy BHP because it is 18% down. Or you could sell $400 of PFE and buy BHP and BP because both are down. If you were to do this, then buy $340 of BHP and $60 of BP. The real point is to accumulate stock, not worry about the price of the stock. At some point, your portfolio should rebalance and the stocks that are down will come back up. The interesting thing is that stocks don't always follow a pattern, so some stocks will rise while others will fall. You can make a profit from these up and down movements. Most people make mistakes by being impatient and wanting to do something. Sometimes the best thing to do is sit on your hands. You can be your worst enemy. You also need to rewire your brain and stop listening to what others say. When a good stock, like KO, Coca-Cola, goes down, that is the time to buy. If you liked what you see, hit the subscribe button or share. Thank you. This has been EmersusTech.